नमस्कार। तो फोगला जी के वेरी इफेक्टिव सेशन के बाद में आई शैल बी कवरिंग FCRA बिकॉज FCRA रिन्यूअल की डेट अप्रैल में खत्म हो रही है, एंड देन अकाउंटिंग एस्पेक्ट एंड देन ऑडिटिंग एस्पेक्ट। बेसिकली 3 चीज में मैं कंसिडर करूंगा मैं। एंड बेसिकली वी आर डीलिंग विद अ सेक्टर जिसकी कोई डिफिनेशन नहीं है। नॉन प्रॉफिट सेक्टर माने वो इंडिकेट कर रहा है कि वो क्या नहीं है, लेकिन क्या है वो नहीं बताता है। वो बोलता है हम नॉन प्रॉफिट है या हम नॉन गवर्नमेंट है, लेकिन वो क्या है इसकी डिफिनेशन किंतु इस सेक्टर की नहीं है। इसलिए फोगला जी ने कहा कि अपना जो पर्सन की डिफिनेशन में भी उनका नाम नहीं है। अलग से AOP ट्रस्ट बोल के वी हैव क्रिएटेड अ न्यू एंटिटी। तो बेसिकली NPOs आर द एंटिटीज हु आर एंगेज्ड इन चैरिटेबल एक्टिविटीज। नाउ व्हाट इज चैरिटेबल एक्टिविटीज, ये डिफरेंट एक्ट में डिफरेंट है। इनकम टैक्स में 7 में उन्होंने डिवाइड किया है। सर्विस टैक्स एक्ट में चैरिटेबल एक्टिविटी की डिफिनेशन अलग है। CSR के लिए शेड्यूल 7 में उसकी अलग है। तो आप ये मत सोचिएगा कि वी आर एंगेज्ड इन चैरिटेबल एक्टिविटी मीन्स वी आर हैव अ सेम ट्रीटमेंट इन ऑल द एक्ट, बिकॉज चैरिटेबल एक्टिविटीज हैव अ डिफरेंट मीनिंग अंडर इनकम टैक्स, अंडर सर्विस टैक्स, under CSR and under FCRA. So we have to be very particular whether our activities falls under charitable purposes within that act or not. Now we have discussed about the formation of the trust. First we have to form either as a trust or as a company or as a society. Once that formation takes place, then only registration which makes you charitable is the income tax railway. Otherwise, there is no central legislation through which your NPO your operation can be identified as a charitable institution. Just by forming a trust or a society, you are not a charitable institution. So when you get a 12-way registration from the income tax, your charitable status is first time recognized by the statutory bodies as a charitable institution. So income tax registration is a must for all the NGOs. Once our NGO status is clear, then it will depend upon how we get fund and what we do. Then we require operational registrations. So if your NGO want to get foreign fund, then only we have to apply for FCRA registration. If you don't want to get FC fund, there is no need for FC registration. If you want to go for a health, want to go for the hospital, you have to apply for the health license. So now your activity and fund will decide what type of operational registrations you require. The point I am making is the act I am dealing, FCRA Act, is not applicable to all the NGOs. It shall be applicable only for those NGOs who want to receive foreign fund. Okay. In this session I shall be covering basically what is FCRA and when it is applicable to an NGO, and if it is applicable, then what are the compliances we have to do. And I shall also deal very in detail the FCRA renewal process. So what is foreign contribution? To come within the definition of foreign fund of FCRA Act, you must receive a foreign contribution. What is foreign contribution? It is a fund received from foreign source. And when they define, they say the fund received foreign source is a foreign fund, and any income from the fund is from a foreign fund is also a foreign source. So suppose you have put your foreign fund in a bank account and you have earned interest. Though that interest is earned in India, but it is from that foreign fund, it is also formed part of your FC fund. What they have excluded? They have excluded if you are doing a export business, if you are exporting a services, when there are commercial transactions, then that receipt of fund is not a foreign fund for FCRA purposes, because you are receiving in exchange. Normally donations are received without any exchange. It is a one-way transaction. So when there is a commercial transaction takes place and you receive a fund from outside India, it will not come under the definition of foreign fund. So foreign fund is basically a receipt of fund from a foreign source. So what is foreign source is very, very important. Foreign source means any company incorporated outside India or from a foreign citizen or from foreign embassy, and also from a company registered in India but having more than 50% shareholding from a foreigner. What is the impact? If you are taking a fund from Hindustan Lever or SDFC, and because their shareholding more than 50% is owned by FIIs, they are foreign source for the purpose of FCRA. Hello? Meaning thereby, if you want to receive donation from Hindustan Lever or SDFC, you have to have this FCRA registration.
What about Union of India giving some donation?
Now, the foreign source, they have defined some source as exempt, like World Bank, like IMF. So they have a list of 128 organizations. The source is foreign, but for FCRA purpose, they are not foreign. So we can receive as a local fund in a local bank account. So the source might be appearing India, but that are foreign. So very, very important to us to know what is foreign source. And again, here currency is not important. The source is important. Suppose your friend living in London and sends you a remittance in dollar in your bank account. Where is a foreign source or is a Indian source? If your friend is still holding Indian passport, then it is Indian source. So your friend living in London holding still Indian passport and sending you money in dollar is an Indian fund. It is not a foreign source. Again, your foreign friend holding a foreign passport come to India, and while going back he have some Indian currency. He want to donate that fund to a NGO. So if you want to donate the Indian fund to that NGO, Indian currency, whether it is an Indian fund or it is a foreign fund? Foreign, because the source is foreign. So the key point is the source, not the currency. And sometimes source may be foreign, like World Bank, but they are not foreign. And sometimes source looks to be Indian, like SDFC, but they are foreign. The first key learning is we must know what is foreign source.
Overseas citizen Indian.
Now, it is a
Suppose a person having an Indian passport, but he is a citizen or a green card holder of another country, and he is having an NRE or an NRO account in India, and he remits fund in INR from the NRE or NRO account. In that case, it is
how the fund is transferred, in which currency it is transferred is not important.
like previously when we read about what is the source of how the donor is earning money and giving us.
That is not important. Who is giving money? What is his legal status? Who is giving you money? If he is holding Indian passport
He's holding.
and he is giving from his in double citizenship, it is a foreign source. Because OCI.
Double citizenship, you have only one citizenship.
In double citizenship, they are still holding foreign passport.
So when somebody who's having a green card and he's
No.
Still you are Indian citizen. Indian citizens cannot hold double citizenship.
Yeah.
Pakistan and all they allow it. You can hold Pakistani citizenship as well as UK citizenship, but in India you have to hold only one citizenship. That is, even if you are a green card holder, you are Indian citizen.
So if you are holding an Indian passport, you are an Indian source. So now, you have received foreign fund. Whether this act applies? Now FCRA says, have defined in three broad categories. One is prohibited. That means this set of person cannot receive foreign fund, even after registration, like judge, like political parties. So they have a list of prohibited categories. They cannot receive foreign fund. Now, second category is when you are receiving foreign fund for a defined program, and definite program may be education, social, culture, religious and economic. So you might be receiving foreign fund for a defined program, and program comes under this 5 heads: education, social, culture, religious and economic. And you might be receiving foreign fund from your own consumption. Your son acquired foreign citizenship, sending you money for your own use. That falls under third category. So FCRA says, first category, they cannot receive foreign fund. Third category, for own consumption, no need for any registration, no compliance is required. But if you are receiving, you are in the second category only, if you are receiving foreign fund for a defined program, then all the regulations, all the registration applies. So even if you receive foreign fund, if you fall under third category, there is no requirement. But the new FCRA 10, here, they have very peculiar situation. They are saying the gift you are receiving from outside your Indian relative holding Indian passport. This is not a foreign source, no problem. Second, they are saying gift from person holding foreign passport and not your relative. They are saying no regulation. That means not relative and non-Indian you can receive for own consumption, for own use. But if you are receiving from your relative holding foreign passport and the receipt is more than 1 lakh, then you have to intimate to the ministry through FC1. Meaning, if your son, if your brother, if your sister, they are living outside India and they have acquired foreign passport or foreign citizenship, and if they are sending you money for more than 1 lakh in a year, as per the new FCRA 10, you have to intimate to the ministry in FNC1. And this is very peculiar. If you are receiving from non-relative, no requirement.
1 lakh in IC.
In IC. And if you are receiving from a relative, then you have to intimate. I think it may be a technical lacuna in the act, but the law exists today is this. So basically, now FCRA will deal with the second category. If you are receiving foreign fund for a defined program, and you just see the five purposes that doesn't include health, education, social, culture, religious and economic. Whether it means a hospital can receive foreign fund without FCRA registration? Again, the FCRA Act has not defined what is education, what is social, what is economic and other limb. But in the website they have given a permissible activities under each of the activities, each of the nature of the program. Under social, they have covered some of the health program. So we have to look into our program, into the permissible activities in the as per the FCRA website. Because in the act they have not defined what is social and what is economic. Now what to do? You are a person having defined program and you are receiving foreign fund. Then we have to have registration first. First requirement. The registration is now only for 5 years. Earlier 1976 Act, once it is registered, it is perpetual, like 12B, it is easy. But now FCRA, the registration is built only for 5 years, that means every 5 years you have to renew it. And second type of registration is prior permission. If you are a new organization, you are not a 3-year-old organization, then you can have a prior permission with the ministry. And for 5-year registration, you have to renew every 5 years. This is the first task you have to do. Once you are registered, then you have to follow some regulation. Regulation regarding bank account, regulation account regarding books of account, regarding returns filing, regarding intimation. Then you have to follow restrictions. How much admin expense you can have from the FC fund? How can you invest your money? How can you transfer your FC fund to a non-FC fund organization? And to a FC fund to FC registered organization. And if you are not following these things, then you have to face consequences, suspension or cancellation. So this is the FCRA all about. First you have to examine it is a foreign fund. Second you have to examine we are receiving for a defined program. Once it is a defined program, then we have to register, we have to regulate, we have to restrict, and we are not following, we have to face the consequences. So today I will deal basically on the operational compliances once you are registered and the FCR renewal. Because renewal is, the last date is April this April. And the most of the NGOs are interested in getting their FCR renewed. So this bank account, FCRA says you must receive all your foreign funds through one bank account only, which is registered with the Home Ministry. That means at the time of making application, you have to register with one bank account, and through that bank account you can have all the foreign receipt from that bank account. Now the problem arises, you are registered in Calcutta, bank account in Calcutta, you have program in Patna. So whether the fund can be transferred for a license purpose to other bank or not, this was not clear. The new act has made it clear. For license purposes, you have a number of bank accounts, only for license. That means first fund has to come to the mother account, and then it can be transferred to the license, separate license account. That is, no fund can be directly received in the F1, F2, F3. The fund has to come in mother account, and then it can be transferred to the license accounts. So technically an NGO.
Sorry sir, F1, F2, F3 can be non-designated account.
Yeah, depending upon your requirement. Like in your case, when you said you want to charge 10% to F1 account, funding agency 1 account, that means you want to charge 100% to F1 and you want to take 10% out from the F1 account and F1 account to your unrestricted account. That means within the designated bank account you have a different bank account for your own organization. So from F1 you have to transfer to your unrestricted account. To overall organization, that 100 rupees one is in F1. When you charge 10 rupees here, from F1 it goes to F3, total fund balance remains the same with the organization. Because expenditure has not taken place, only charge is taking place.
But not in designated account.
Not the designated, that becomes unrestricted. That becomes unrestricted. Overall organization, 100 rupees was with you, 10 rupees you charge to funding agency 1, take that account from that account and transfer to your unrestricted bank account. That means organization wise you are still 90%. Because expenditure takes place when the money goes from this pocket to that pocket. From this pocket to this pocket, expenditure has not taken place. It is not a legal expenditure. So under the income tax, this charge is not an expenditure. Under FCRA, this is not utilized. Because under FCRA, all the money is 100 only. Even by charging 10 rupees, your FC fund remains 100. So it is not an application for FCRA, it is not an application for income tax, it is an application only for that funding agency.
So one question.
So this amount, some NGO what they do, they take from F1 and take to unrestricted fund, local unrestricted fund. They can't do. Because nature of FC fund will remain FC all the time. So you cannot charge from F1 and take to this unrestricted fund.
If you can take from FC designated to unrestricted.
Within the you have to take unrestricted fund within the FC section. Your general fund can be two, from FC and from local. So from FC fund you have to create a unrestricted fund within FC. And you have to keep that FC unrestricted fund within FC only. Because 100 rupees you have received from the mother account is still lying with you. How you can make 90?
So one question. So at times the NGOs for their internal transfer, like suppose they are into a FCRA project, but they are utilizing their own resources, like their own employees, their own conference hall and etc. For that they are setting off a certain amount, right? So in this case, can they transfer it from the designated bank account to their unrestricted domestic account?
What? They have to create F4, we call it F unrestricted fund.
Okay.
Or you take F3 becomes unrestricted from the organization. So in your case, whatever you charge to F1, it goes to mother account and then comes to F3 as your unrestricted fund. Because the ministry says from F1 to F2 no direct transfer. In between operational account there cannot be an inter-transfers.
So they can transfer it from their designated account to another account.
Another account.
Another their own domestic account.
No, not domestic account, within FC.
Within FC.
Within FC.
So, but then they can utilize that fund for other purposes.
Yeah, because that becomes undesignated. When it was with the F1, it was restricted. When you transfer to F3, your own fund, it becomes undesignated. Now you can spend. But you cannot transfer that fund to a local account. Now,
What is the essential difference between F3 and unrestricted?
F3 we call it unrestricted for the time being when she was discussing. So F1 becomes a funding agency. Funding agency funds are restricted. That means we have to use it for the purpose it is given. So within F3 section also we have a unrestricted, we can be an unrestricted fund. Your friend can give you fund without any specification, just like voluntary contribution. That money you can, in F3, that can be unrestricted fund of organization, or those type of donation can come part there through mother account, not directly there. And that account you can use for your general purposes. So when you charge 10% to the F1 account, then you can transfer that money to the F3 because F3 is your own account, unrestricted. And then you can use for your unbooked expenditure directly here. There is no rule that all unbooked expenditure should be booked in local fund only. They can be booked also under FC. Now Ministry says recent guideline in 21/10/2014, they are saying like business, every payment of more than 20,000 must be by account paycheck. This is not under that, but they have given a notification or a circular that from FC fund if you want to spend and if the amount is more than 20,000, it has to be by account paycheck. Just like business, profit and gains from business. So now when you withdraw fund from the FC bank account, be very particular, don't withdraw more than 20,000 at a time. Because at times when you go for making expenditure for advances, we tend to withdraw 1 lakh, we go to the field, spend and come back. So they have not defined what is expenditure here. So it becomes a very, very difficult provision for most of the NGOs because we are tend to withdraw cash, go to the field and make expense in the cash because field nobody will take.
So what is the penal consequence for this?
They have not given, but this is a violation. Any violation will lead to your suspension or cancellation. So we have to be very particular. Now, Fogla, you are saying whether inter-charity donation is allowed. So whether one fund, one FC registered organization receive fund as a network organization and they are transferring fund to the 10 different organizations. They are the good organizations. So whether that transfer has to take place from the mother account or from the operational bank account, because all the funds we have transferred to the mother account to the funding NCY account. Now we want to give 10 different funding NGOs. Whether it has to be from the mother account or from the operational bank account. The Act is silent on this. We understand from the operational bank account we can directly give to the other NGOs. So this is regarding bank account.
Other NGOs that should also
FC register. Most of the time you will find donor and mother account. Yeah, receiving mother account has to be. Operational bank account cannot receive direct funding. This is clear? But very, very important when we practice, when we day-to-day work. This is very, very important. Now books account. Now here again, FCRA says you have to maintain a separate set of books for FC. Fogla is saying when you are having an income generation program, separate books. So basically for an NGO, we are required to maintain minimum 4 set of books. One for FC, one for local fund, one for IGP or business like operation, and one for our fund. In most of the NGOs, this unrestricted fund gets with an FC fund, non-FC grant. Most of the NGO maintain only 3 books. Foreign fund separate and separate books for non-FC grant, unrestricted fund add together. So they are not in a position to know what is their own fund. Every fund gets mixed. And we all know in the NGO it's very difficult to find good accountant. So if everything gets mixed, very difficult to know what is the financial status of that NGO. So we always advise to maintain minimum 4 set of books if you are running a business. One for FC, one for local grant, third for business income, and fourth for own fund, unrestricted fund.
Sir, in a computerized environment, can this FC account and non-FC account be in a same?
No, company net, if somebody are foreign tally, there should two minimum two tally.
Right.
One for FC, other for non-FC.
In the same
Minimum two
tally,
tally.
in the same tally, we cannot maintain the separate ledger.
Even even if the ledgers are
No, no, no.
separately designated.
What is the difference between books of account and account? Sometimes your donor says you have to maintain separate set of accounts. Sometimes your donor says you have to maintain separate books of account. When they say separate books of account, that means separate set of tally. When they say separate account, that means you can keep a separate ledger, separate cost center, separate group. But when they say separate books of account, as FCRA says, as income tax for business-like activity says, then separate set of books means cash book, primary books as well as ledger. Not only secondary books. Ledger is a secondary books.
If in the same
That
tally, if
means
you
the
maintain
software-
separate cash account, separate FCRA
No,
bank
no, no.
account, then that also will not do.
No, no, no. Separate company. Your organization.
That is a
FC.
legal requirement.
Legal requirement. Legal requirement.
That means the software must look at the FC account separately.
Even your software can locate FC separately. In a big software, you can have those identification. But the law says separate set of books of account. They are not saying a process where you can keep identification of the FC with the law not saying. They are saying you have to maintain a separate set of books. So through legal identification, through software identification will not. Now FCRA says you have to preserve your accounts for 6 years. And they also say you have to maintain an investment register under FCRA. And very, very important here. Now when we prepare a report or file annual return, FC6 or previously FC3, we have to give classification as per the purpose, 56 purposes. And again all 56 purposes into the location. Under which location how much expenditure you are incurring. That means your accounting chart or accounting framing should be done in such a way that you can also determine purpose wise, you can also determine location wise. Otherwise what is happening at the end of the year, again the accountant goes to the watchers, prepare Excel sheet, determines the purpose wise, prepares the location wise, and then prepare FC6. So when you are preparing your accounting chart, it must be framed your accounting chart in a way that you can determine location wise and purpose wise and funding agency wise from that system itself. Because when you tend to make another Excel sheet, the chances of mistake is there. So this was regarding books of account under FCRA. Now annual return. Now FCRA says we have to file 3 returns. Annual return for FC6 is a combined return for FC cash, received in cash and in kind, FC7 for article and FC8 for foreign securities. That was initially under FCRA 1976, only we are submitting FC3. There was no system of 3 returns. Under FCRA 10 there is a system of 3 returns. One is cash in kind, FC6 we normally all do. FC7, if your foreign source, they have sent blanket. But they have sent some machine. You have not received from your mother account. For that, FC7. They have sent some investments. For that, FC8. So now 3 returns has to be filed if you have falling under all these 3. Before 2010, we are filing FC3. For kind, there was no requirement of filing any return. Only we have to maintain a stock register in the form of FC6. Internal document, no need to submission. For securities, FC7 was there, but that form books of account, no part of return. But now, FC3 becomes FC6, the number has changed, and now they becomes part of return. Every 3 returns you have to file. Now this is a dilemma. Suppose you have not received article, you have not received foreign securities, whether you are going to file nil return? Because Act says, if you have not received foreign contribution, you have to submit a nil return. Now most of the NGOs, what they are doing, they are filing FC6 return, but this is a combined list because they includes cash and kind both, as we used to do previously. and we are not submitting FC7 or FC8 nil return. So this is again a technical flaw. All the NGOs are filing only one return, that is FC6, but they are not filing FC7 and FC8. This is not clear whether they should have filed nil return for FC8, 7 or 8 or not. Previously there was no penalty for late filing. Now, the huge penalty. Last date is 31st December. If you are not filing within 31st December and the period delay is only 90 days, the rate of penalty is 2% of your foreign contribution receipt. So if you are receiving a grant of 1 crore, the minimum penalty is 10,000 and 2% 2 lakh. So you have to pay up to 2 lakh of penalty. And minimum penalty is 10,000. That means if your organization has not received anything, nil, you are filing nil return late, you have to pay 10,000 if the delay is 90 days. If the delay is more than 180 days, more than 6 months, even if you have not received anything, you are filing nil return, you have to pay 50,000 as a penalty. So these acts were first regulatory in nature, now they have become a source of getting revenue.
Sir, FC6 has been filed.
That's fine.
Out of some misconception, FC7 and FC8.
Now we are not advising to file FC7 and 8 because FC6 is a combined return.
Right.
In kind we are saying nil. And through institute, when I was in committee of NPO, we have tried to take this type of clarification from the ministry. Because we have a number of issues on which no one can say what can be the correct position. Because FCR Act is very small. And like service tax, it is guided by circulars, more than Act, circulars and notifications. Like FCRA, this is guided by FAQs and their whims. Act is very simple, but they are not guided by Act. So like this is one of the instances where we need clarification from the ministry, whether in the case of nil return, and we are specifically submitting FC6 saying kind nil, so whether that should be sufficient compliance or not. But this is not clear at the moment. Now attachments. What are the attachments we have to file? Once we submit online return, when we send the hard copies, we are submitting receipt payment account, income expenditure account and balance sheet. Then certificate from the CA. Right? This was the requirement under FE 76. So when we go for the financial assessment, we find here some default. These two are everybody's filing, but additional requirement under 2010, you have to also submit the certified copy of the mother account, full year, certified by the bank with your annual return. Most of you are not doing this. That means when you are submitting FC6 return online and when you depositing it through hard copies, what you have to attach? You have to attach FC6 online, take the printout, FC, only FC, not total, FC, receipt payment account, income expenditure balance sheet, certificate from the CA, your mother account, full year bank statement certified by the bank, and statement of fund transfer from mother account to the operation account. So these two are the additional requirement from 2010, but most of the NGOs are not following. So that makes your return incomplete. Now again, in filing so many issues, when we prepare FC6 return, we have to classify first recipient and second recipient. You know that? In FC6 return, first recipient and second recipient then total. But under the Act, what is first recipient, what is second recipient? Nowhere defined, only in the form it comes. In the form it comes, first recipient, second recipient. In the Act, it has not come. The normal meaning of any income from the FC fund is become second recipient. Or you are receiving from an FC registered organization in India. So the fund come to organization A, FC registered organization, and you are receiving from organization A to B. Then becomes a subsequent recipient. So either you are receiving from a FC registered organization in India, or it is the income from the FC fund. It becomes subsequent recipient. So we have to classify which receipt is the first recipient and which is second recipient. And I always advise you, when you're taking a donation FC fund from India, take a certificate from that donor that this is a second